Oil has officially crossed $100 a barrel. If you thought inflation was bad last year, you haven't seen anything yet.
That is right, Liam. The headlines from March 2026 are painting a grim picture. Geopolitical tensions in the Middle East have choked the energy supply, and the economic fallout is hitting us right where it hurts.
Today on 5 Min Smart, we are unpacking the reality of $100 oil, the ghost of stagflation, and what this energy crisis means for the cash in your bank account. Alice, everyone is throwing around the word stagflation suddenly. We know inflation means rising prices, but what exactly makes stagflation so terrifying?
Stagflation is the ultimate economic nightmare. It is what happens when you combine stagnant economic growth with high inflation. You are paying more for everything, but the economy isn't growing, and jobs are at risk.
So we are paying 2026 prices on a 2024 salary?
Exactly. And the trigger this time isn't just printing money, it is an energy shock. The ongoing conflict involving Iran has effectively throttled the Strait of Hormuz, causing Brent crude to spike past $100.
And because every product we buy is transported using oil, that energy cost gets baked into the price of literally everything on the shelf, right?
Right. It is a domino effect. The farmer pays more for diesel, the trucker pays more for gas, and by the time that Apple reaches your grocery store, the price has doubled.
I remember the Federal Reserve was supposed to cut rates this year to help the economy. Does $100 oil mean the Fed is trapped?
They are completely cornered. If the Fed cuts interest rates to boost the stagnant economy, they risk firing up inflation even more. But if they keep rates higher for longer to fight the oil-driven inflation, they risk causing a severe recession.
So it is a lose-lose situation for traditional monetary policy. What is the market doing in response to this?
We are seeing a massive flight to quality. Investors are dumping hyper-growth tech stocks and rotating their money into energy, industrials, and safe haven assets like gold and the US dollar.
This sounds incredibly dense for the average viewer. Alice, what is the 5-minute action plan to survive a stagflation era?
First, audit your energy dependence. Anything you can do to reduce energy consumption directly saves you from the worst inflation. Second, lock down your employment. In a stagnant economy, job security is your best asset. Third, look at commodities. If you are investing, expose a portion of your portfolio to the very things that are going up in price.
And don't panic. Markets have survived energy shocks before, but the cost of ignorance is much higher than the cost of oil. Alice, before we sign off, can you give us one smart remark our viewers can drop at the water cooler tomorrow?
Absolutely. Tell your co-workers, relying on the Fed to fix $100 oil is like trying to put out a forest fire with a spreadsheet. Monetary policy cannot print crude oil.
I love that. A spreadsheet can't fix a supply chain. If this breakdown helped you see through the noise, hit that subscribe button and join the 5 Min Smart community. And if you want to support our independent research, click the Ko-fi link in the description. Your support keeps us ad-free and objective.
Let us know in the comments, how much are you paying at the pump right now, and is it changing how you spend?
Thanks for watching 5 Min Smart. Stay smart, stay ahead.